Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services. And we're here with our weekly wrap-up. Graham, I understand there was some volatility in the market last week. Can you share a little insight on that?
Yeah, absolutely. We saw it last week. I'm not going to be surprised that we don't continue to see volatility through the rest of this year. That's something, if you've been on the call or if you're a client of ours currently, you've been on the lunch and learns, we've talked about exhaustively that we're going to see more and more volatility in this market as it matures, as the Fed now goes from a more dovish stance to a hawkish stance, meaning more aggressive and tamping down inflation. So we're thinking about now the market's time to digest how quick, how fast, or the pace of interest rates going up. So that's why, we're seeing the volatility. I think what I've mentioned before is we're seeing a lot of the side of the market that is high growth, high valuations. That's really come down 20, 50, 70% in some situations, where we've seen that money move right over to what we like, tends to be a little more boring, a little more value, a little more cyclical side of the market. And that's what we've seen really rally. Now we're getting into an environment that maybe one side of the market is starting to be a little oversold, maybe the tech area, while some of the value or cyclicals maybe a little overbought. But this isn't a recommendation for anyone to go out and make a trade or rebalance in one area or the other. We just want everyone to understand that this market is in the middle of rebalancing, and that's what we see going on. And I think that's what we're going to continue to see, not just in stocks, but we're going to see that in bonds. So I would encourage, and I would always stress this, make sure you have the right balance that is for you. Make sure you understand the risk that is involved in your portfolio, and you can bear that volatility so you can ride out these tough times. I also think one thing that's really important, if you have funds in your investment account that you need for a project, for a child's college, for your income needs that you might be pulling out over the next couple months to 6 months to a year, we might want to be more mindful of keeping that in cash, or keeping that in a very ultra low conservative area. I know it doesn't make much, but it doesn't necessarily lose you with market volatility, stock or bond. So just a word of caution to just be a little more cautious about what income you need from your accounts as we move through this more volatile period.
That makes sense. Okay. Well, thanks so much for that, Graham. And also, just a quick reminder to our viewers that next week is our first installment of our January Retirement Planning Today class. So if you or someone you know is interested in learning the A to Z about retirement planning, then please give us a call here or check out our website to learn more information on how you can attend class with us. And have a great week, and we'll see you next week.
Take care.
Bye-bye.